It's basic demand and supply scenario right over here. What's happening is the OPEC is set to meet tomorrow for a meeting to assess the global oil market. And however, media reports state that they have made no plans to change the resumption of the oil production that is set to be in December. So currently, demand concerns in China and US is, in a potentially oversupplied market are weighing down and taking completely over than the Middle Eastern conflicts that we do see. But with the oil and gas that we do have in focus, let's just talk about where the Indian oil and gas currently stand. Now let's start first about with the oil marketing companies. Now IOCL, BPCL, HPCL benefit from the lower oil prices that we are seeing, and the OMCs are currently enjoying super normal marketing margins on petrol as well as diesel, are what brokerages are saying. Now the current margins stand at in the range of 10 to 13 rupees per litre. When you talk about if margins are expected to contract, well, brokerages do expect a retail fuel price cut in the month of October of 2024, and the price cut speculations come on comments made by the Oil Secretary of India as well as the state elections, especially upcoming in Maharashtra. Now, media reports do expect government to also hike the central excise duty, which is an indirect tax that is levied on the sale of petrol and diesel, and a hike on this is negative for OMCs. Now, when you talk about the impact on the retail price cut, well, CLSA says that a price cut along with higher oil prices could leave OMCs vulnerable in a scenario where there's also potential excise duty hike. MK expects healthy margins of 5 to 7 rupees per litre in H2 FY25, and this is despite oil price. This is if oil prices maintain a $75 range. JP Morgan says that a cut of ₹2 will not hurt estimates, but 5 rupee cut will have an impact on the oil, on the OMCs if the current oil prices remain. Now, then the next aspect is the PNGRB report in December. And the committee will be gathering to recommend measures to unbundle the gas transportation and marketing. Committee to review the marketing exclusivity of CGD companies. Now, JP Morgan says that any potential measures to increase competition is negative and could weigh on GAIL India, MGL, IGL, but it's too early to impact any business or earnings impact. Lastly, when you talk about analyst recommendations, well, in the OMCs, highest buy calls for HPCL and BPCL at 16, highest sell calls on Indian Oil on the other side at 13. GAIL India currently has 22 buy calls, 10 sell calls and 3 hold calls. Mahanagar Gas has a higher buy recommendation versus IGL and GGL at 16, while Gujarat Gas has a higher sell calls versus MGL and GGL at 14.